Okay, so I got you. OKTA, I spilled into the next video. I'll repeat it here so I don't have to relist it. Anyway, I would not want to be long OKTA from an investment perspective. If I am, I better not be long all in because it could slip if the market slips and it drops to 60 or lower. So I don't want to take that ride. Rallies will be met with sellers. If I'm trading and I get long with a stop, okay. But if I'm investing and adding, I have a problem above me, a lot of sellers waiting. It is a fast-moving stock. Palo Alto Networks, I'm afraid for the whole industry. Wild stock. Hard sellers into 250 and 255. Hard buyers below 232. Keep that in mind. Month before the earnings. If for some reason they lose 230, 225, I think they could be at 210 pretty quickly. I don't know how they can beat 255 and 266, but those are catalyst up. So it's an active trade. If I'm an investor, I don't add. I nibble. I don't go all in. Paramount, falling like it's going out of business. Trying to put a floor. I guess the only good thing is that they haven't made a lower low like the market has. That's upside, but they did it here too. They rallied and failed. So exit on the next rally if you're actually trading the stock. If you're stuck in it long and it rallies and gives you back to even, I'm out. I think there's a lot of sellers around 1150 and there's no support. Path, dangerous stock to be long, but that is a support zone below. All right. There's a support zone, and unfortunately it spreads through 1340. So everything here is support, but how hard of a support is it? They're selling rallies. You have to respect that. Rally sold, rally sold. It's a descending channel. Arguably, 16.2 is death. So when you rally into 16.2, exit because there's a ton of sellers there. They at some point they will make a bottom and they will rally. Use the rallies to book profits. Petrobras, I wouldn't touch this company. A whole bunch of headlines you can't control. Technically speaking, what is this wick? Wow. And how strong is the support? You should ask yourself. If you lose the support around 15.2, I think you can easily get to 14.8 or 14.7. I don't think you can easily beat that candle. 16.1. Pfizer, I wouldn't touch this with my enemy's money. Scammer of a company. Not my words. They've been criminally fined. So criminally, not like negligent, criminal activity. So scammer fits. Solid bounce level, too old to matter. I don't know their business. Study their medicines. Hopefully they are solving problems, human problems. I think rallies will fail. If we do get a rally, this is a, fits at any level. So if they rally into 31, 32, they're going to be met with sellers. Unless they get a headline. Biotech companies, medicine companies have headlines that go, whoa, this way and that way pretty quickly. So respect that. Don't short it. But if I'm long, I'm exiting. I'm not involved in this stock. It's just too much. The P&L looks solid and the stock does not. So there's something going on. Palantir, I would buy dips in Palantir. Long-term company. The leader in AI. They've been around for, 12 years maybe doing AI things. And now AI is the thing. So their P&L is coming into them. The business is coming into them like Netflix did. And Roku. So Roku was existing for 16 years, losing. And then Netflix says, I got you, Roku. I'm going to bring everybody to stream. That's where you thrive. So now everybody's doing AI and that's where this one thrives. So they don't have to sell companies on the AI concept. Everybody knows AI is where it is, and these guys are there. So the problem is, look left, there's no volume below this line. So if for whatever reason it falls below 1360, it's a fast trip down to 12 and 10. I sold puts at 12, and they played out. I would sell them again. I don't own calls. I don't own shares anymore. We made money on the way up. and I exited a little bit too soon, but I still made money. So I will re-enter. Okay, I will put alerts at random spots, not so random, but at areas that are interesting to me, and I would repeat the trade. Up here, I'm not adding. I could invest, nibble one part of 5, so 20%. That's it. PXD, Pioneer, falling into a base from which they broke out, so I would assume there's buyers into 230. But there's a weak point here. I don't know if it is weak point or was this an overshoot lower, so there should be support below, and there are sellers above. Don't take my word. That's what happened last week, here and here. So respect that. Respect the price action. Ooh, earnings in 4 days. Yikes. Wait, where's the earnings on Palantir? Same earnings in 4 days. I don't know. PayPal, earnings in 3 days. Good grief. I do not have a trade on PayPal. No trade on PayPal. Okay. Yes, Peter, I'm with you on that one. So PayPal, they're selling rallies. Again, financial technology company. The company itself is whacked out of its mind. The business is great. The company is just whacked. I do business with them, and it's very hard to do business with them to where I just veered away my business from them. And in a couple of years, I would be doing no business with them. It's just going to take me a couple of years to veer away from them. Rally will come. I would sell the rally. That's what they're doing, selling rallies. Why will it come? I don't know. It's falling into 2017 area where there was a giant gap. Interesting. Huh. I did not know that. So let's put an alert. 2017 giant gap below, question mark. I mean, what if my chart right now is wrong? That's pretty weird. Yeah, really. I'm serious. So I am not selling puts in PayPal. I do not have puts sold, credit put spread. I've closed all of those. They all won, but they were not easy. What is this? QQQY. What is this? Yeah, that I'm not going to comment on this one. What is this? No, not for me. Whatever it is, sellers at 1830. Rocket Lab. If you're in here, tell me what this QQQY was. What did these guys do? Rocket Lab. Aerospace company. Seller at 4.5. If you beat 4.5, you can get to 4.8. Same comments up here at 5. A super strong buyer into this candle here. So any dips below 3.9 are by definition buyable. Earnings in 10 days, don't know if that matters because they hardly have anything going on here. So I'm not sure I would want to invest in, I mean, trade it very harshly, but investment wise, do your homework. Dividend play on the QQQ. Thank you, Stefan, and welcome, by the way. I saw your comment there. I appreciate it. Thank you. Hopefully you stay for a while. Reach out if you have any questions. Okay, so this area is well consolidated for Roku, but it's also old. So it's an area, not a hard line in the sand. So if I were to put a box around it, I probably already have it. Old consol. So it's an old consolidated zone. Old, May. Older. Old is like 1962 type of a deal. This is just older. Same as PayPal and same as all these great companies on P&L. They're falling out of control. So earnings in 3 days. Come to me during the week before the earnings and I'll let you know what the options are saying. But, I would be an investor in Roku, but not I wouldn't short it here. I wouldn't go all in. I wouldn't add to my longs. I would dare take longs into the earnings, but as long as it's a trade, not an investment. So if I sink a few $100 and I'm okay losing that for the opportunity to make a lot of money, yes. And I bet you the implied volatility would be high, so we can do some sort of a diagonal. If you want to bet up or down, we can use that. So come to me the day of, before the report. Raytheon, so there's a lot of manipulation in these stocks that are considered war stocks. This is one of them. And I really don't know what they make. Patriot missile comes to mind. I don't know. So let's look at their income. Defense is 22%. Pratt and Whitney, unless they make war things, aerospace, and intelligence and space. So it looks like only 25% of its business is defense, but it trades like it's a war stock. Now, technically speaking, it's going into the neckline that it lost that I said would bring this target. This target was spot on. So this has happened. Okay, this was that. It happened. And now they're going back into the neckline. Okay, so it's not like I'm backfilling the chart to fit my forecast. The forecast happened. The bounce was shorter than expected, but that was the downside. So, but you can repeat that here. Whoops. You can repeat that pattern here. It is possible. So I'm going to put it here for a visual. A similar pop and drop and lose this and come back even lower. I don't know why they would do that. At some point, they will stop doing that. So they do have a lot of support down here, and they have a lot of resistance above. So from an investment perspective, there's nothing to do. There's no panic or anything. It is what it is. Use the earnings candles. So the bottom of the earning candle is super strong support and super strong resistance. Schwab dividend, because they compete with basically the TBT. TBT represents dividend from the government. This is dividend from stocks. Nobody wants that, right? Anyway, rallies into this neckline are to be sold. I would not touch this. Technically, you're falling into support, but you're fighting the Fed. Use rallies to get out. Or if you're trading, you get long here for a rally, book it like a trade. Schwab itself. They're selling rallies, lower lows, lower highs. So if you lose last week's low, you're going to end up at 47. Otherwise, you could have a chance at 54. If they take out 54, which would be tough, they get to 57. So I guess this came to fruition as well. Doable, possible. Look at that. You see that possible candle right there? That happened. Possible. Okay. So now what? Now you have support that must hold. If you lose last week's lows, you're going down to this area, and opportunity above not going to be easy. Wait, earnings? No. Shopify, earnings coming. So Roku, Shopify, and all of those, yikes. So if you want to invest in Roku, maybe you invest in Shopify, because Roku will probably move Shopify, even though they're not the same business. They're both high-flying stocks, smallish. I'm afraid for Shopify. The management somehow in the last couple of years switched to being negative Nellies, as they say, and ahead of earnings. So what if they come out 2 days before the earnings and they say something stupid and the drop? I would buy that drop if it happens before the earnings. But the business is good. The P&L is good. Somehow did they buy somebody that looks like they bought somebody worth billions, $1 billion maybe. So be careful. Technically, they're falling into support, but the support is super wide. I am not involved in Shopify. I will not get involved in Shopify until it stabilizes so I can get a beat. Right now, it's a falling knife, and it's too fast. It's like a machete. And I will forego the upside potential. If you twist my arm, I will take a call position that is cheap. Like a call diagonal on earnings is relatively cheap because I can buy something out in time, and I can sell something for a day or two that is super expensive, that dies in my favor the day of a report. And I may make it calls or puts. I'm not sure. We'll see. So it's a trade for me for now. It's not an investment. Long-term investment may be okay, but you're going to have some short-term turbulence in Shopify. Okay, rally into the neckline of snow is a problem. It closed at 143 above the neckline of the credit put spread from Friday. So if somebody did the credit put spread that I did and rolled it, they're still doing okay. If somebody did not roll it, they had the opportunity to close it on Friday for 50% gains or leave it and die for maximum gains. Any which way you slice it, it's not a problem yet. It's a good company. I would close that credit put spread on strength, and actually I would close it if it's a small loss or a small gain. or at least make it smaller. If I sold 10 and I decide to close 5, what's wrong with that? It's nothing wrong with that. This way, if it does become a problem, the problem is half size. Okay. Technically, all these tails tell me there are buyers below. Technically, all these moving averages descending, and there are sellers above. So we're stuck. So it's going to follow the markets. If we have a green couple of days in the market, this one may find itself at 148, at which point you should close those credit put spreads. If the markets have a tizzy, they will test these two areas. And I would go long snow, if not for earnings so quickly. Maybe I would actually on a dip. I would repeat that same spread. But I want to make sure it's not going through the earnings. I don't want to be long through the earnings. SOFI reports on Monday. There's no need for us to talk about it. I would buy the dip in SOFI. Up here, it's not attractive enough. If for whatever reason it finds itself below $6 or at $6.10, $6.20, I would get long SOFI into the space and as an investment and sleep on it. Buy shares, buy longer dated calls, sell puts to own shares, any of which one. Luckily, it's a $6 stock by then, and it would be good. Meanwhile, they are selling rallies, so the rally could come like this one. If it dips, the rally will come, and they will try to sell it. The business is fine. So the headline is stuck also on SOFI with student loans, not student loans, which is pretty ridiculous. SPOK. Interesting. What does it do? Mind melds. Oh my gosh. Communication solution in what? So broad. The PNL is weird. The hell is that? So I don't know what to tell you. Hard seller, hard buyer. We're in the middle. Nothing to do. Good trend. Sportsman's Warehouse Holding. What is this? Is this like Big Five sporting goods? Retail sporting and athletic goods. Huh. Never heard of them. Like Costco for sports. Rally sold. Rally sold? Question mark. A lot of sellers at that red line through 6.5. If the bulls are able to take it out of 6.5, they go to 8.50. They get $2 out of it. Buy the dip. It should hold 4.4, that green zone. So if you're long, I don't mind it. You should know that the easy work has been done and there's hard work to be done above. Square, speaking of Square. So I took a loss a few weeks ago on a credit put spread, but then I re-engaged with calls personally, and I've been selling calls against them. They're now red because of that downgrade that French person did. Thank you very much. Merci beaucoup, monsieur ou madame. I don't know if it's a monsieur or a madame. Either way, it's a cornholio in my book. It cost me money. The problem is they lost that support. So now we're drifting lower again. Look, rally sold, new low. Rally sold, they just made a new low. What happens? Is it one of these from here to here? I'm asking. Fits pretty well, right? We'll see. I think there should be an upside scenario. Earnings in 4 days. I mean, if the CEO doesn't go out of his way to sell us on the idea that this is madness and that the stock is a bargain, that CEO is the worst CEO on the planet. Mark Benioff comes to mind. Unfortunately, the guy that leads this company now does not have that personality. Brilliant guy, but it's not. He's not a rah guy. So, look, we're down into the pandemic area. I own calls, not a lot, but it is a position that I enjoy, and it just went red Thursday, Friday. It wasn't red, and it just went red. So I will do something with it over the earnings. I'm not sure what. Come to me during the day before they report, and we will look into the options. Suncor Gas Company, kind of. Right? Tar sands, is it? Anyway, Canadian company, falling into support and has resistance above 34.50. Actually, Suncor was my first assignment on sold puts at 30, I think. buyers and sellers. So buyers below, sellers above. I think it's going to be difficult to make a higher high than these. I think it's going to be easier to retest this one, maybe a little bit lower. So I wouldn't invest in it for a trade. I would invest in it for the long term if I want to, or if I want dividend if they do that. But there's no obvious reason to enter. Fast traders, you could enter for a potential pop and exit if you get that pop. Because if you do cross this selling zone off of this support, you're going to be met with an immediate seller. So take advantage of those quick rallies. AT&T, I wouldn't invest in it, but they do pay a dividend and they make a lot of cash. So the dividend is probably not in danger. Technically, until you break out of 16, it's not that exciting. But if you do, you get $1.50 out of it. So it's a kind of a, let me own stock and get paid for it like Verizon. But they're competing with the government's bond right now. You do have support below, so I don't mind people owning shares. Team, it just beeped at me on Friday. I can't remember why. Earnings in 4 days. So whatever it said, I'm going to ignore it. I'm not going to trade it into the earnings. It does have support. Oh, I know what it was. It's filling the gap down here. And so that should be a solid base, but we do have earnings, and I don't know what it's going to do. Let me zoom out and see what it's done on earnings before. The propensity is to pop and then give back most of it. Drop and then rally. Pop and pop, I guess. Drop. So 50-50. Thanks for nothing. Technically, they do have buyers below and sellers above. I see a scenario to 270, but that is a whacked out scenario because it has to cut through all this resistance and take this out. Doable, but not easy. So I'd have to pull one of these or one of these. It's doable, but it's not easy. So let's say we were here. Maybe we do this. Whoops. And if that happens, you can repeat it. I'm going to visibility on all of them. Yeah, why doesn't it show up? Let's see if it happens. Maybe this. Like drop to 170 on earnings and then pop. Target. I would hold it as an investment against the recent support. Earnings in 17 days. That's a problem though. I'm trying to catch a rally back because there is a rally back on the higher time frame. Meanwhile, there's going to be disruptions on earnings. 113 is a catalyst. Will give you 122. Losing recent support will give you 95, 94. I do have an alert to go long lower. I don't know if I trust it into the earnings. I'll have to reevaluate. This one is a better short than a long up here. I don't know what it is. It's going into a prior fail. So you might see 660 before you see 740. Stop out if you short it. By shorting it, I don't mean you short it outright. Just short it responsibly. Tesla, short the hell out of it. No, but it is vulnerable. Very vulnerable. If Tesla loses support from last week, don't be surprised to see it at 188, 190 or lower quickly. Actually, 175 could be doable, but it needs to lose because it has a drop and it's been consolidating. And if it loses the consolidation, the drop lower would be something like this. I usually put these in white. So they better not lose the consolidation zone. All right. It's not a short. It's just you need to be aware of it. What is Tesla? Yield max Tesla option strategy. Good grief. Does it track the stock? It looks like it. So everything I said about the stock applies here. People, why? Tesla is exciting enough to trade all by itself. You don't need an accelerator. You don't need a 1.5 times accelerator or anything. Just trade the stock. Wow, what is that? And we're almost there. So support and a must hold. If you lose that, you go to here. Who is this? Taiwan Semi. Okay. Good company all by itself, but you have to respect the price action. It's a long with stops. That's what I would say about it. long with stops. Because if you lose these, you might end up down here. And the long opportunity is from here to here as a trade. The company itself is fine if you can deal with the Taiwan uncertainty. UPS. Okay, I took a bath on it. Everything I said about FDX, first video, applies here. They have no appetite to buy it. The problem is the rally. What rally? Look back. I never thought we would go in here so quickly without any bounces. That's why we did the credit put spread. There was supposed to be a bounce here and a bounce here. Neither showed up, and we sliced through them like butter. The bounce showed up much lower when we were already in trouble, and now we don't have any help until you go to 2018, and that's not real help. Okay, so bad trade, bad price action. I probably would never touch the stock again. Maybe I'll buy calls to get my revenge money on it. I'll spend a couple of $100 to get $500-600 out of it and walk away, but nothing more, nothing less. Broken stock, not a broken company. P&L's fine. Headline Palooza, labor things, I don't know. So terrible situation. No immediate support. The support zone is too big and too old to matter right here. It will need help from the market for it to rally back. I don't know what they said on earnings, but that CEO also needs a little lesson from Mark Benioff on how to pump his or her company. Because if the P&L is not falling apart and the stock is, don't you think you need to speak about it? Even if you say things like, I don't know why our investors can't see the value in our stock. It's a fantastic business. Just look at the P&L. That's all he or she has to say. That's it. They're not pumping their stock. They're just saying, just put the price close next to the performance in our financials and see if they match. That's all they have to say to inspire confidence. Or buy shares. Come out and say, I just bought shares. Okay, so we have resistance and likely. We went to the likely. Those circles were there in the USO. And we bounced off of the likely, and now we're going back into resistance. That's all I have to say. Yeah, I think we can drift lower or pop a little bit higher. I think there are sellers around 80, and it's easier to probably come back down to 76, maybe even 74.50. Of course, if there's a war announced, all of that conversation will go to hell because they can say whatever they want. Warner Brothers, that's the spinoff of AT&T. This is no, is it? Okay, Warner Brothers. So it does have a bounce level, but it's 2022, not that recent. So if I'm long, I'm staying in it because it's too late to panic and I have some relief below me. If I'm looking to get long, I should take part 1 of 2. If it gets cut much lower, then I would get out. So it's a decent buy and hold and see what happens, but the earnings are in 10 days. So if somebody wants to gamble on it, it might be a fantastic rally. But let's see, earnings pop and then give it up, pop. And a drop. So 2 pops, 1 iffy and 1 drop. I will look at the options. I bet you it's liquid enough. So come to me. World Copper Limited. Dude, WCUFF. That is the longest ticker I've ever seen. Anyway, I don't do 5-letter tickers when I don't have to. I don't know what to tell you. There's no income falling to 0. There's nothing I can help you with. XLC. This is like XLF, XLU, XLY, XLI. This is the XLC. So figure out what companies are in it. It's a communication selector fund. It probably has some 5G stuff in it, maybe Verizon and stuff like that. Dividend payers, I'm going to guess. So those stocks are under fire. Rallies into 65.50 are going to be met with sellers, and it's easy to drift lower. So yeah, you do have support, but the support is not a hard line. It's a zone that extends through 60.5, I think. All of this is support, but you can go. So be careful. Not my favorite sector. The rallies are going to be met with sellers. XOM falling into support. I can't stand these companies because of the enthusiasm that people treat them with. So great companies, excellent management, bankable people, committed to their dividend. They're struggling against the dividend of the 5% yield from the 20-year And the 10-year bond, so those bids that used to buy XOM for that income go to the sure thing of bonds. Now, rallies will be met with sellers into 110. And you better hold this, because if you don't, the target is like 94 with a lot of support in between. But what happens is if you fall below, you rally and you start drifting lower, and then you lose this one a little bit at a time. Not an obvious entry point. For an investment all in, it is a tradable entry point for a rally. It is an investable entry point if you're doing 20% of your total stake. That's my opinion on that one. Excellent companies though, no knock on them. All right, so are we here still? Do we want to do Qualcomm? We'll do Qualcomm. I believe somebody asked for Qualcomm earlier. Okay, lost a level that needed to hold at 108, 108.50. Neckline, you see it right there? And I think that's going to be a problem, retaking it. And if they do retake it, this area right here, 110, 110.50 is a selling point. And so that is going to be a lot of resistance. Earnings in 3 days. So management has the opportunity to say, forget all of that. We're going to the moon, folks, because ... Okay, it is investable. The company is great. The P&L is great. The business is fine. It's going into harsh bounces on a daily basis. Qualcomm is, you can bet on it for earnings one way or another. I will look into it in 3 days. Okay, somebody's asking for another one. Yeah, I'm not taking full-blown commitments here. I would answer 1 or 2 or 3 because we're already done 110. So I'll do CHBT, and that's it. Okay, let's pick another one. There's nothing to be done here. What do you want? The business is just crazy stupid business, this electric vehicle business. You just do your research. Use logic. If you're invested in the company, I would not add to the investment. This is not an average down company. Okay, they can go to zero. They can go to zero. Apple, you average down into, or average into, but this one, no way, not for me. Just look into it. Okay. I would look at AXP, and that's it. We'll call AXP the last one here today. Fridays, I give you time to submit a whole weekend, submit tickers, and I plan my day accordingly. I have something to do right after this one. Holy cow, it is already 8:45. How did that happen? Oof. Okay, so those of you who signed up for the other webinar, just hang in there. We'll be there in a minute. Falling into support, but I think this has a trip to 134, 132, which is better support. Rallies will be met with sellers. And with that, we're going to end the recording. Thank you for watching it.